Hey guys, John here with a silver update. Firstly, a big thank you to everyone who commented, sent me messages, emails, Facebook, whatever it was, just sending your support for the robbery that took place the other night. Now, we're over it. Yelise and I have dealt with the issue. We've moved on. The mental imagery will always be there. That'll never leave. But at least we can use that now to make sure it doesn't happen again in the future and potentially save an even more catastrophic event from occurring. So in that regards, we're thankful that nothing really did happen. A couple of $1,000, $5,000 maybe at the most in terms of resale value of stuff stolen from us. They're probably only going to get probably $500, $1,000, maybe $2,000 if they're lucky for what they stole. So it's really not a big price to pay to prevent something like that from happening again in the future, and myself being more vigilant and taking the necessary precautions to ensure it doesn't happen again. If you remember that diversification is key video, I got some silver out. There's about 70 or 80 ounces in the video, but I got about 200 ounces out and just had it on my desk here, and they didn't take it. It was very interesting. I said to a mate, it goes to show the bubble. The bubble's not here yet when you can leave 200 ounces of silver on your desk and they take all the shitty old laptops and leave the silver. I thought that's pretty funny. It was Pamp Swiss stuff too, some of it. So their loss, I guess. That would have been the real dagger. Anyhow, so I want to answer a email from TheSchaefReport in this video. He sent me 3 questions, and they're a common set of questions that I get in one way or another, so I want to take this time to answer it in one go. I have sort of answered all of them in videos before, but it's probably a good way to tie it all together. Link below to TheSchaefReport too. He's a good silver dude, one of the more logical, rational, level-headed, clear-thinking guys, like how people are meant to be. So subscribe to him. Good channel. Okay, question 1. I pretty much know your position on silver now, the core position only at this point. However, you have said in the past that you were looking for a good buying up around 23.75. Is that still standing, or are you pretty much done with silver for a couple of years? Based on what you said in the previous video. I don't know what I said in the previous video, but you're probably talking about me saying that it's not going to 50, that I don't think it's going to 50 this year. Firstly, that's just what I think based on some pretty loose reasonings why. I could be wrong, and it might go to $300 this year. We don't know. So I'm not ever just done with silver. I'm always watching this market, always got my toes in regardless. So no, I'm not done with it. I don't think it'll get to 50 this year if what I think is going to happen plays out for this year, but I could be completely wrong on that, so no. Secondly, I don't just have a core position. I think it's been maybe 2 or 3 videos, definitely 2, maybe 3 videos where I've said since I sold, in those $48 levels when I did my silver at a turning point video, that I think I've come out with 3, definitely 2 videos saying that I've bought again. And one was not long after the big crash, obviously the spike and then the big crash. And that video, I think it was at the $33, $34 level, round thereabouts that I bought. A bit lower again as well. It was another video, high 20s, low 30s, that sort of area. I've come out with at least 2, probably 3 videos saying that I've been buying there, and I have been. So I don't just have the core position anymore. I'm starting to build that investment position up. If it gets to that 23.75 level, firstly, that's just a arbitrary line in the sand, doesn't really mean anything. For me, what's more important is if it gets below that $25 level, I'm going to really start going big into silver, start pounding the table again like I did back in $10, $11, $12 silver. So if it gets there, that's when I really start making some noise again. In fact, I've got an order in on my trading station to buy big at that 23.75. The reason why I've got the order in now, and that's for physical, that's a physical purchase. I've got it in on the paper market, so if it spikes down, if the paper price spikes down to that 23.75 or lower, I'll be in. I'll be effectively, I would have bought at that price, and then if it goes back up after that, I've locked that price in. So I have a feeling, well, silver, when it makes its lows, it does so in a spike formation, and same with the tops. So I've just got that ready to go if it happens. Coming from an American perspective, many of us here have fears of hyperinflation because of huge deficits our government is running, but also because of what the rest of the world is doing, BRIC nations in particular, regarding strong rhetoric about dumping the dollar when trading between each other. If you were an American and got paid in dollars, do you think you might have a different outlook on precious metals as a whole? That is to say, might you have a much larger core position than you do right now? Well, firstly, I've answered that I do have a larger core position. I'm starting to build up a position again. Secondly, again, I think it was either in that video or one or two afterwards where I said that I wouldn't have sold my silver if I was in America. Certainly wouldn't have sold as much as I did, because there was a much bigger comfort being paid in Aussie dollars than US dollars at that time. It's the lesser of two evils. Granted, it's still fiat currency, but if I had given you a choice between Australian dollars and US dollars, I think everyone on this channel is taking the Australian dollars. At least we have a truckload of resources backing that dollar up, and a much less sick-looking deficit. Well, not that ours is, you know, all roses and shiny, but you know, it's a little bit better than the US's. So yeah, I would have been much more hesitant selling for US dollars, definitely. If it turns out it would have been the right move, but you know, because the dollar's rallied since then. But in all honesty, I would have had more troubles doing that. Lastly, you seem to base most of your work from charts, technical analysis. This has given you a lot of success. However, many people believe America can and will participate in a dollar devaluation overnight, which could give the unprecedented, which wouldn't give the unprepared an opportunity to invest. We all know that charts and technical analysis can't predict cataclysmic events such as that. Does that seem like a remote possibility to you, and do you figure that your core position will pay off in that scenario? Or do you think hyperinflation is highly unlikely? Okay, where do I start with that? Firstly, I also agree and have said, again, probably 2 or 3 videos ago, that I think when gold and silver make their moves, it'll be somehow where you won't have a chance to invest at that point. You're either in or you're out. It won't be like, what's that on the news? Oh, dollar devalued. I'm just going to call that broker. Just going to see if he's got any gold left. It won't be like that. It'll be you're either in or you're out. And so yeah, and like you said in the earlier question, the BRIC nations and anything, if they're moving away from dollar denominated transactions, okay, that's actually a bit of a, it is bad for the dollar, don't get me wrong, but it's not as bad as you think, and I might go into that in another example. It is bad, don't get me wrong, but it's not as bad as you think. Where it comes down to, where the real pain for the dollar could be, is if those bonds, if that debt starts flowing back to America. That debt has been exported all around the world. So the most likely hyperinflation scenario would be not that of overprinting money, because there's enough deflationary forces to counteract that. In fact, that's why they print, is to counteract the deflationary forces. It won't be because of the BRIC nations or whatever not choosing to, or choosing not to use the dollar. It'll be the repatriations of debt back to America. That would do it. So I think America knows that, and is possibly in there with their military, hoping that, or coercing that not to happen, and making these dollar rallies even more appealing in order to sell debt. So of course the game can't continue forever, but I hope that answers that question. A dollar devaluation overnight seems to me the most logical thing, really. So there'll be something that happens that sets off a trigger, and you're either in and you're out there. And if I miss it, I miss it. So be it. I have enough that, you know. Firstly, I'm in Australia too. Don't forget, it means a dollar, Australian dollar, will also rally. So I think that answers your question. Over time, though, confidence will erode in all things fiat, and that's what I'm looking for, where it's not about inflation or deflation, it's about just lack of confidence in the system. So yeah, hope that answers your question. Talk to you soon.